I want you to think back to the very first time you were introduced to the game tic-tac-toe. X's and O's, 3 in a row wins. If you're like me, this brings back some great memories. Maybe your mom and dad or grandparents taught you. It's an easy game, but let me ask you a question. Do you remember who won the first time that you played the game? I'll take a guess that it wasn't you. The rules are simple enough, but not until you understand the strategy of the game did you stop losing the game. In the financial world, there are rules to the game as well, mostly tax codes, and there's also strategies that businesses and the affluent use to keep more of their hard-earned cash working for them. As I said in my Family Financial Miracle, all financial tools have an expense. With some products you can see them and with others you can't. The first thing I want you to understand is that just because you can't see the expenses doesn't mean that they're not there. For example, if you buy a CD, can you see any of the expenses? Are there any there? Of course they're there. The bank is making money on your money. If they're paying you 2% on your money, they're making more by loaning it out on car loans, mortgages, credit cards, all at higher interest rates. They make a spread. That spread costs you money. But the banks and the financial institutions are the ones taking the risks of not getting their money back, so they get the reward. They get to keep the costs because they're the ones that are taking the risk. With life insurance, the big risk is premature death. In some cash value insurance products, you can't see the expenses at all. Whole life insurance, for example, is one of the types of insurance contracts where the expenses are built into the product. In other words, there is no public list of itemized expenses available to the buyer. All the buyer can see is their cash value each and every year. You know that the expenses exist, you just don't know exactly what they are or how to calculate them on your own. And because of this lack of itemized expense detail, whole life insurance has become an easy target for those trumpeting the notion that it's too expensive. Now, many of the same critics that pick on the expenses of whole life insurance often promote traditional investment products like mutual funds. But with mutual funds, unless you're one of the very few that actually reads the prospectus, you may have no idea how much or how little you're paying for your mutual fund. And to make matters worse, even if you do read the prospectus, you may only be beginning to see a portion of the total expenses. In many cases, the trading fees and the pricing spreads are not reflected in the prospectus. Those expenses are normally shown on the statement of additional information. There are even studies out there that suggest that the true cost of mutual funds may often be closer to double what is disclosed in the prospectus. Now, please don't hear me saying that you should or you shouldn't own whole life insurance or mutual funds. All I'm saying is both of these type of financial products lack a great deal of detail when it comes to fully understanding the true total cost to the consumer. In other words, if I could, I would prefer a financial product where I could see behind the curtain, so to speak. And even better, I would prefer a product where I could have some ability to lower the expenses where possible. And that is the case with Index Universal Life Insurance, or IUL. With the IUL products, you can actually see all of the costs that you are incurring with your purchase. And because you can see the line item cost detail, it makes it much easier to understand what you can do to lower your expenses. Tic-tac-toe, 3 in a row. I'm going to say it again for the record. Permanent life insurance is expensive during the early years, particularly in year 1 through 10. But if you know the strategies to minimize the expenses, there is no other product that offers as many benefits for the cost that you incur. And for most of you, it is going to be less expensive than the taxes and the investment fees that you're paying in some of the more traditional investment accounts you may be using now. So what are the expenses in a life insurance contract? Let's go over them together. First of all, there's policy fees. I like to say that this is your share of the cost to keep the lights on at the insurance carrier and the cost to mail you your annual statement. Typically, this is $100 per year or $50 per year. This is a fixed cost that we have no control over. Next, it's unit charge. To keep it simple, this charge covers the cost to issue the policy. Insurance companies need to make a profit, and this charge will be collected for about the first 10 years of the policy. This is a fixed charge that we also do not have control over. Cost of insurance. This is the cost that we have control over and is the reason we are stuffing as much cash into the policy as fast as the IRS will allow us to. If you buy a life insurance policy that accumulates cash value and you pay minimum premiums over your life expectancy, that policy will cost you more than a policy that is max funded. You heard me correctly. And I know that is not what you've heard from the media or, for that matter, from the insurance companies themselves. The higher your net death benefit is, the higher the cost of the insurance is, and the more money that the insurance companies collect, and the more money that they make. Let me explain. You pay cost of insurance on what the insurance companies call net death benefit. Net death benefit is defined as the death benefit minus your cash value, which equals the net death benefit. So let's summarize what we've learned. The insurance companies get paid more cost of insurance on a minimally funded contract versus a contract with the same total death benefit but has much more cash in it. The insurance companies collect fees because of the risk that they're taking. Because of the death benefit, life insurance is the only financial product that I have found that takes care of my money as well as my family if something happens to me. It also provides me with lots of living benefits that I can take advantage of while I'm still here. Because of that, I'm willing to pay their fees to pick up the living benefits and the net death benefit that comes along with all Index Universal Life policies. By the time you finish reading my entire book, I'm sure that you're going to feel the same way.